The world's fourth largest bullion producer, Gold Fields, will be listing its domestic unit, GFI Mining South Africa, on the JSE around mid-February next year. Now, the unit, whose major assets are KDC and Beatrix gold mines, will be renamed Sibanye Gold. Gold Fields ended the day significantly up nearly 6% and one stage up nearly 12%. Joining us for more on this, the new Sibanye Gold CEO, Neal Froneman. Welcome, Neal. Good to have you here. So, new guys for you. So, have you resigned from Gold One and Glyth Gold?
Yes, I have resigned effective the 31st of December. To take up this role, which I think is a fantastic opportunity for me.
So I think this move, unbundling the rump of the business, and so it's a South African business, I think it was expected by the market, if not from Gold Fields, certainly from one of its peers, such as Anglo Gold. And the idea then, and I think no matter how you package it or trying to word it or what your investor relations guy comes and tells us, it's about unlocking value for shareholders because it's a problem operating in South Africa.
It's difficult to operate in South Africa at the moment, but we've looked at various opportunities in the rest of Africa and in fact in the rest of the world, and every region has its challenges. We have to look at the positives in South Africa. We're blessed with good infrastructure. We have to do things different going forward. So I see labour as an opportunity, not a problem. Our geology is well understood. We've got 100 years of history of mining exactly the same ore body. So there's a lot of benefits in being in South Africa as well.
Although Nick Holland has been quoted as saying that the local gold mining industry has about 5 years left because of the cost structures.
Yes, look, we have to get to grips and reverse the trajectory of costs. I think this is a very brave first step, and I have no doubt there'll be, further moves by other companies in this direction. I remain very positive, and prior to even the industrial unrest and prior to Gold Fields doing this, I've been an advocate of creating a proudly South African company for some time, and Gold One was the initial start.
Mark, you're nodding. Are you buying the story? Would you be interested in buying a purely South African gold mining operation?
I think this is superb news. What Neal is saying is a breath of fresh air for the industry and for the country. Perhaps, Neal, you could remind viewers the cash flow that will be unlocked on an annual basis at the moment that can be deployed exclusively into South Africa and into your mines.
Yes, I think we should not see these assets as assets that are mature near the end of their life. If we do nothing, clearly they're near the end of their life. If we do nothing with these assets, they will still generate about 2.5 billion rand a year of free cash flow. Now that's very significant. What has happened previously is the cash flow from these assets has gone into developing international projects and South Deep for Gold Fields. So to some extent they've been constrained. The cash flows going forward will be ring fenced, and they'll go into sustaining these as a proper business.
Neal, and then just to summarize, Beatrix and KDC will be in the new South African Sibanye entity. However, South Deep, which is also the other South African entity, is going in the Gold Fields international one. What was the rationale for leaving South Deep in the international one?
It really went around two things, and I'm careful talking on behalf of Gold Fields here. South Deep is an asset that has an ore body that is not typically South African. It's not a tabular, narrow reef, labour-intensive ore body. It's a massive ore body that's going to be mined using mechanised methods, which is very much in line with the open cast and shallow underground mines in the rest of the Gold Fields portfolio. So it was more about splitting assets along their characteristics. The other big difference is that the rest of the Gold Fields portfolio are assets that are in development more than the assets that will find their way into Sibanye, which are mature assets requiring relatively little amounts of capital and having very significant cash flows.
And then just coming back to your comments on labour, saying that you see it as an opportunity and not a problem. Obviously, it's been a major topic this year. What are your comments on the current environment, and how do you propose to make that work better in the future?
It's been very challenging getting through the strikes. As you know, Gold One was right at the forefront of it, and then I'm really talking in the gold sector. I suppose it started in platinum, but certainly we were one of the first gold mines to experience the unrest. I think the end result of the unrest, the position taken by industry, I think the recognition by organised labour and government has resulted in, I want to almost call it a new playing field. There's a recognition by all stakeholders, and I include the industry here, that we cannot continue to do the same things that we've done over the last 30, 40, 50 years. The world has changed. We need to adopt international best practices, and terms like fly in, fly out, where we've got migrant labour. We cannot just do away with it, but we have to change the way we think about it. We cannot allow duplicate homes to be developed, doubling the cost of the worker. We've got to find a way to establish communities where they are appropriate. There are people that live around the mines that have come from those areas. Those are communities that need to be developed in those areas. So there's a willingness by both, I want to say all stakeholders, government, industry, and organised labour, to get around the table and to do things different. And Sibanye is going to lead the way.
So you sound very positive that indeed, because there's a value unlock for shareholders with respect to the non-South African assets, as we've seen with the share price move, because I think for a long time those assets, the valuations have not been reflected in the share price. But I think then what I'm hearing is that you say through your work and through your hope in the future and this willingness to change, that some value unlock will happen on the South African assets too.
Absolutely. What's amazing to me, there's even analysts that have the Goldfield South African assets at a negative value. They clearly can't have negative value. We don't know what Sibanye will list at. It's really a listing by introduction. Our best estimations are that it'll have an enterprise value around 20 billion rand, but the market will determine that. That is value unlock. If the average analyst valuation is about 13 billion rand, I think it'll list much higher than that. That's value unlock.
Just on that point, Neal, we're saying saying that with gold at 500,000 rand a kg at the moment, and yet the share price is almost assuming it's half that sort of level. What do you think could be a catalyst to actually have share prices perhaps more closely matching the underlying price of gold, and which is still substantially higher than your cash cost of production?
Quite right. I think if you look at our all-in costs in Sibanye, in the assets that are coming across, there's a 25% margin. That's a very nice margin in anybody's terms. You're right, it doesn't flow into the share price. And some of the reasons are that we haven't got the fundamentals right in our business. The world has changed. The world is certainly, from a gold investment point of view, is not about growth. It's about returns to shareholders. It's about yield. These assets have to be a fantastic opportunity to establish a high yield vehicle. That is the fundamental. If you get that right, and there's many other aspects that we fail to deliver on. We've missed production targets. Projects have been late. Capital's been overspent. But fundamentally, we got to get back to paying dividends, and this will be a high yield vehicle.
Neal, you've been quoted as saying there are opportunities for regional consolidation, and I think somewhere in that paragraph also your former employers being mentioned.
Yes, and I suppose I'm known to have an entrepreneurial spirit. I think what I've been at pains to explain today is that our core focus is going to get these underlying operations to be optimized and to deliver as they should. Clearly, we have first mover advantage, I believe, and there will be opportunities for consolidation. I think it's pretty well known that Goldfields and Gold One have been working on a tailings JV. Some of Gold One's assets are in the same region. I don't think there's going to be vastly different strategies between the companies. I certainly believe that some of the relationships that have been established with the Chinese important relationships even in Sibanye. And therefore there could be activity between the two companies, but there's nothing pre-agreed.
You have approval from the Reserve Bank for this deal. How difficult or complex was it to get that approval for this new structure?
Again, it's difficult for me to comment on that exact point. I don't think it was that difficult, but it's probably a question best asked of Nick, because there's nothing different to what Goldfields was doing before. Certainly we worked very hard on other approvals and support. We engaged with government, we engaged with organised labour, and of course there's always a perception that you're trying to leave the country. So there's been a difficult, but I think a very rewarding set of discussions that's taken place with all stakeholders.
Neal, thank you. So Kevin, is your perception of this deal and just how the sector, the gold sector looks to you?
Yeah, we actually have a buyer recommendation on Goldfields, and we valued it
and this was before the announcement?
Yeah, so we valued it about 130 Rand at the moment, and we think there are catalysts that are needed to unlock that value, and we think this is one of them. So we're quite positive on the announcement.
Mark, do you think others like Anglo Gold Ashanti could follow suit with a similar splitting of local and global assets?
Well, I think Nick and Neal have set precedent here, and I think there's going to be some scratching of heads and some smoke-filled room conversations in the next few months around this. But I think that what it does do, it shifts the whole paradigm associated with mining in this country, and that in fact, we still are the sort of treasure trove of the world, and I would like to think that mining's got its best days in front of it.
There you go. Neal, I know you agree. You've said so. There was a new Sibanye Gold CEO, Neal Froneman, who discussed the aspects of the unbundling of the bulk of Goldfields' South African assets.